Welcome to season 10 of Accountants Are Sexy, Changed My Mind. In this season, we have 10 brand spanking new guests to introduce you to. We'll be talking about things like exit plans, niching your business. You'll meet one of the captains. We're going to talk about finding your spiritual home, and we even have, of course, a discussion on AI and how it can improve your business. So stick with us, but before I introduce you to any guests, please meet our new sponsor, Swoop for Advisors.
For those of you who haven't heard of Swoop for Advisors, we partner with accountants and bookkeepers to help their SME clients get access to grants, loans, commercial mortgages, equity investment, R&D, savings, and much, much more. We're a one-stop shop funding platform for SMEs, helping them find all the best available options in the market across a wide range of products to support their growth at all stages of their life cycle. Our job is to make you look like the heroes in your clients' eyes.
So another massive thank you from me to Swoop for Advisors for sponsoring the show. Before I introduce you to the next guest, can I just ask for you to take a second and make sure that you are subscribed to any channel that you're watching this on, be that Spotify or Apple or iTunes or wherever you are. If you just take a moment to subscribe to the channel, it's really helpful information to us to understand how this podcast is received, and we can just continue to improve it the more we know. So thank you for taking the time, and I'm going to hand you over to the next guest. Well, hello and welcome back to another episode of Accountants Are Sexy, Change My Mind. Today we've got Geraldine Carter, who is my guest from across the pond. So Geraldine has come to give her perspective on the differences between the UK accountants and accountants from across the pond. So we're going to pick up on some similarities, some differences, and generally just chat about all the things that actually I really enjoy talking about as well. So I'm looking forward to this one. So very, very much, that's not the right word, welcome to the show, Geraldine.
Thanks, Kelly. I'm so happy to be here.
This is amazing. So if you would do me the honour, because I don't know too much about you, seen you around, got an understanding, but not too much. So do me the honour of just bringing me up to date on why you're talking to accountants and what the main themes are that you talk about.
Yeah. So I have an engineering degree. I'm not a CPA, never wanted to be, never will be. And I found it curious that accountants worked weekends. I had been coaching, business coaching, had a number of clients in a number of different industries, professions, and so on. And it struck me, it puzzled me that the accountants who touch numbers all day long, and many of them have clients who own businesses, that these folks were working super hard for the money that they were making, and that they had a giant pile, $60K of AR past 90 days. I was like, what is going on over here? And once I got a peek behind the curtain, I was fascinated by what I was finding about how accountants are business owners, just like everybody else. Just because you're good with numbers and money doesn't mean that you absorb good business practice through osmosis. Yeah. So it's been a really fun and rewarding and fulfilling journey to help accountants become better business owners so they can do more of what they enjoy and serve their clients at a higher level.
Yeah, I think accountants come into the trade, they're technicians. I can't remember the book. Everybody's read it.
E-Myth.
Thank you. But they are technicians, and they're brilliant technicians, but they don't yet understand how to step into being a business owner. Just like when I started a business, I was a social media person. I was using social media to get sales. I had no idea how to be a business owner. It's not you're right. You don't just get this through osmosis. It doesn't just happen. You have to learn this stuff. And I feel that accountants, bless them, are all like put on this pedestal. You're good at numbers.
Yes.
So therefore you're good at business. And it's so hard for them.
Yeah. It's there. I think the disadvantage that they have is there's this unwritten sort of tacit expectation that they somehow should be good at business. Whereas we don't expect the photographer or the graphic designer or the web designer or the carpenter to be an automatic good business owner, but we somehow have an expectation that the accountant should get it. Yeah. But they are technicians, like you say, just like everybody else. And stepping onto the game board of being a business owner is like going from playing checkers with your round discs to playing backgammon. It is a different game with a different set of rules, and it is more complex and there's more going on. You could argue that it's more like three-dimensional chess, but not to kill the analogy. But we have the expectation that, I can just go out and play checkers because it's the same technician, same tactics, same round discs, and I get paid for it. And I can, make 4 times the money and get paid what my boss was billing me out at. And we come to find that that's not at all how that works, because what we didn't realize was that behind the scenes, while we were busy being a W-2, being so upset that the boss was billing us out at 4 times what we were getting paid, that the boss was actually doing a pile of work behind the scenes, doing biz dev and marketing and sales conversations and all the rest. And it's not until we own our own business that we realize, not only do I need to learn those things, I need to get good at them. I thought I could just do my job and get paid 4 times more than I was. Yeah. And that's when we kind of hit the wall.
Sometimes people sell it like that, though. Oh, you're good. If you're good at your job, then the business would just come. And they say some people have built their practices on referrals and they don't need to do any marketing because they're just good at their job. And I'm like, hold on a minute. Like, that's not the story for so many people. There are so many people out there that aren't achieving their goals because they haven't yet mastered all of these other hats that they need to master. So, and also, there's a slight issue with just building on referrals because there's no control. And I think we're going to come to that in a minute with niching, which is going to be super interesting. The main topic that you talk about is this work ethic. And you say you help overworked CPAs get down to 40 hours, just a standard working week. So why is it so important right now? What's happening? What are you seeing that makes this important to talk about?
So I would argue that it's always been important. And the pain point that I experienced when I was a business owner subject to my overworked CPA was that I wasn't getting what I needed in my business. And we had a $1 million business that I co-founded with a friend. Because of my engineering background, it made sense for me to fall into the managing the operations and the finance role. And I had to learn all the managing the money and all of that, the accounting, the tax, all the reporting, the financial statements. I had to learn that on the fly. And my accountant, I've now gone through in air quotes, 4 accountants, CPAs, and bookkeepers, all of whom were way too busy to be able to help me in the way that I needed. And I would have paid more, but they were caught in the hourly trap and the hourly mindset. So, and I'll come back to answering your question in just a moment here, but the hourly trap and the hourly mindset trap is starting to shift. That in the accounting profession, there are more and more people starting to see how terrible and tragic hourly is for your clients and for the CPA. But and so they're starting to shift to fixed pricing, tiered pricing, and so on. But the mindset is still lagging. The mindset is still work performed overtime for clients is what creates money. Value creation is what creates money, right? You capture the money, you capture the value that you create through your prices. So that mindset, that way of thinking is what has not yet caught up in the accounting space. And as a consequence, accountants are still working long hours for the money that they make. And the reason that this, I think, is a problem is that business owners are suffering because they can't get the expertise and the guidance that they're looking for. They don't understand their numbers. They can't make decisions. They're totally guessing. They put a finger in the wind and they're like, I guess we'll buy this piece of $300,000 equipment and hope for the best, because I emailed my accountant hoping to connect and I haven't heard back and it's been 3 weeks and I'm tired of waiting. I've got to make the call on whether or not we're going to buy this thing. And in the US, we love to say that small business owners are the backbone of the economy. We talk that story all day long. And our small business owners don't have, I don't want to put this at the feet of accountants because I don't think it's their fault. I'm not trying to place blame. How I position it as a massive opportunity for accountants who want to increase their revenue and work fewer hours to create more value for their existing, especially business owning clients. When they have more time to understand what those business owners need, and how they can apply accounting to solve problems that business owners have.
Mm.
And that, I think, has the power to change the very nature, the very fabric of what we tout as the fabric of the economy.
Yeah, you sing a very similar song to me. I think that the more we empower accountants, the more accountants we have out there, the more businesses we can support, the better our economy will be. And I keep saying this, but the division of wealth. Like, let's get more money into the hands of people, like the people, and the people are the people, business owners paying for their daughter's ballet shoes, or they're taking their family on their first holiday to Disneyland. Let's get money into those hands, like directly. It's going back to the whole exchange economy. I really thoroughly enjoy the small business economy. So let me go back to your pricing, because you're right. You're absolutely right. And I see this so often, and particularly, and I'm starting to find my way around, but particularly with people who've come from a background where they are employed and they get paid salary, break it down into an hourly rate wage, and they might get, I don't know, 14 quid an hour or whatever it is, 15 quid an hour. And then they say, oh, well, I'll charge 20. I'll charge 25. And that's amazing. And they think that's like, but it doesn't build a business. It builds lots of jobs where they have lots and lots of bosses. So talk me through how you support accountants with that mindset and shifting it.
Yeah. So I think that this is a necessary stage that a business owner needs to travel through, right? You can't skip ahead. You've got to have that experience. It's almost like a rite of passage. Like every business, at least in the US, gets caught with their pants down on self-employment tax the first year because they have no idea that they need to be saving, in our case over here, 15.3%. And they just take in all that money. And then the first year they're like, oh crap, you mean I owe the government 40 grand? Nobody, like, that would have been nice to know. And that is it's terrible that it happens, but it's almost a rite of passage being a business owner that you have that experience. And similarly, this idea of, you get paid 14 quid and you're like, sweet, I'm going out on my own, hanging my shingle, and I'm going to charge 20 quid. And then you have a bunch of bosses, and then you realize just how hard you're working and how something isn't working, right? So with accountants, they have this different factor that a lot of other business owners don't have, and that is that compliance is legally required. So there is a demand for accounting that a lot of other business owners don't enjoy that privilege or that advantage, so to speak. So accountants can fill up really rapidly because it is legally required to file taxes, obviously. So they fill up with work, and then they hit the ceiling, right? And then they're like, crap, I want to make more money, but there's no more space in my calendar. And I have clients who are ringing my phone, asking me where this, that, and the other is, and I'm already way behind. So now what do I do? And it's usually not until they hit their own ceiling and they feel like their hands are tied and they want more money, but there's no more time, it's not until then that they start to ask the question, what's going on? How do I fix this? How do I change this? So that's when, once they start asking, that's when they become more open to, what are ways that I can make this same amount of money or more without having to take on more clients because I don't have more time for more clients, without having to work more hours because I don't have room for more hours. And that's when they become open to ideas about potentially prices. How do I optimize my pricing? And how do I be more selective about only working with my best clients and clear out some of the minnows from my client roster?
So the transition from an hourly rate wage, you mentioned some different pricing structures there. Do you have a preferred pricing structure that you guide them on, or do you think it fits different accountants, I don't know, based on their audience?
Yeah, such a good question. So it's not about my preference so much as it is the right tool for the job.
Yeah.
So you wouldn't use a power drill when you need to open a can of corn, right? So if you're trying to use a can opener,
in America do, right?
Probably, knowing us. So you want to have the right tool for the job. You wouldn't use a can opener to put a nail in a wall. So it's less about preference of tools and just looking at the job and saying, okay, what is the tool for this job, right? So the tools that tend to work really well especially for monthly recurring work are tiered pricing, bronze, silver, gold, because you give your client a choice of yeses, right? Choice of 1 is an ultimatum, take it or leave it. A choice of 2 is right or wrong. I want to pick the right one, not the wrong one. So they get stuck in which one's right or wrong. And a choice of 3 is like, oh, great, 3. Which one do I want to pick? Every answer is a yes. So tiered pricing works great for monthly recurring. It works in a lot of other situations too. The ninja move to get off of hourly billing, especially for the knee-jerk response of, well, I don't know how long it takes, is, well, then find out how long it takes by doing a diagnosis. And you flat price the diagnosis, and you just put if you think it's going to take you 2 hours to look under the hood and figure out what's going on to size up the project, then, flat rate price of $4.95. So those are the two most common things that we use.
The faster you get, the better you get at your job, the faster you get,
Totally.
The more systems you put in place, the more you're rewarded. Like, it makes total sense.
It's once you see it, you can't unsee it.
Yeah.
And you think to yourself, how could I have not seen this for so long?
So what are some of the reservations, from my perspective, when I talk about tier pricing? They go, oh, but it doesn't fit everybody. And it panic. They come over in sheer panic because they want to make sure that everybody's looked after exactly. I think from my perspective, you could do the tier pricing on basic packages, but you can always add stuff on. Like, this is a free world, If they need more, do more, charge more. But their brain just spins to say, well, if I've got tiered packaging, similar to niching, if I put this box on it in this container, then it's going to put other people off because it doesn't fit them exactly. So is that something that you come across as well?
Yeah. So I come across that exact same thing. So the way that we address that is when you design tiered packages, you think of one person. You just imagine one person and you design it with one person in mind.
Yeah.
You say, what does this person need to, you think of 3 outcomes, right? And I use the analogy of the hamburger. So your bronze is nothing. It's like the minimum that you could realistically call a hamburger. So it's a patty, top and bottom bun. Yeah, that's it. Not a single sesame seed. And then the silver has the tomato, the lettuce, the onion, and then the gold has like all the drippings and trappings. Yeah.
Has a lot of gherkins in it.
A lot of gherkins. Or if you're Australian, it's a burger tower with a layer of beet. So, but you have to design it with one person in mind. Yeah. So, because not everybody's going to want, in our case over here, a McDonald's style burger. Some people, because that thing is like flat and tastes like cardboard and pressed sawdust. Mm-hmm. So some buyers are going to want a brewery pub burger that's made of real meat that like hasn't been frozen and delivered on a Cisco truck. So that is a different level for a different buyer. So you have to know in your roster, who are your McDonald's kind of eaters and who are your brewery eaters? And then who are your fine diners who are eating Michelin star burgers that are so expensive they don't even cook it and they call it whatever, steak haché or something, right? So you have to know who you're buying. I actually got it wrong. It's called something else, but they crack an egg on it. Anyways, it's not steak. It's what is it? Anyways, so you have to know who your buyers are. You have to look inside your client roster, and you cannot design a bronze, silver, gold package that is designed for a McDonald's burger kind of eater for the person who wants the Michelin star burger. They're not going to want it. It doesn't make any sense. And that's why your clients, when you talk to them, that's why their brains explode, because they can't imagine, because they recognize that they have different kinds of buyers inside their client roster. So then the obvious question becomes, well, what kinds of people do you want to have inside your client roster? Do you want to have the Michelin star kind of clients? Do you want to have the brew pubs, or do you want to have them be like McDonald's eaters? There's no right or wrong. But we got to figure out who you're serving, because you cannot serve a McDonald's burger in the same restaurant out of the same kitchen as you serve a Michelin star burger. It's just like, it doesn't work. You can't sell a Chevy from an Audi dealership. So we need to decide who we want to work with. And once we narrow that, then everything becomes so much easier.
Now you're talking my language. So moving on, you would say niching. I will come back and say it's niching, and we can have this debate. But what's your experience of niching, and how scared are their eyes when you talk about it?
Yeah, I'm working on dialing back the fear on niching.
Yeah.
I don't care, scallions, green onion, whatever, same thing. So I I'm really working on helping my clients and people in my audience, right? Because I have a podcast too, to feel more comfortable and more confident with the process. And I think that there's a lot of talk about it now, much more than there was, even 5 years ago. And it's kind of becoming more commonplace that it's a good idea,
Yeah.
even if most people still kind of aren't really moving too far along the trail. So I talk about simply taking the next viable step and not trying to step too far ahead. Because if you step too far ahead, you'll split your pants. So we just look at who are the clients in your roster that if you never did a day of that kind of work again, you'd be delighted. So usually for us, that's often audit, inventory, and manufacturing. Not always, right? But okay, great. So from this day forward, you don't take any new audit, manufacturing, or inventory work. You just say no, right? And that so often is a breath of fresh air for them to have permission to say no to a kind of work that they just don't enjoy doing. Because until then, before that, they always thought they had to say yes to everything because every client was money and they were building.
And also, accountability can be applied to absolutely every single business, and they start to think, well, why can't I? Shouldn't, but I should be able to. I'm an accountant, so their world is so big. But it's quite empowering to say no. So over here, we've got some people that work with construction, and we have this thing called CIS. So some people don't like CIS work, and just to give them permission to say, I don't want it, is amazing.
Yeah. I've had clients cry when I told them they didn't have to do any more individual tax if they didn't want to.
Yeah.
Tears of relief because they were so overwhelmed and burdened by it. So we just take one step at a time. What's the one thing you would love to get rid of and never do again? And we do that. And then I ask, what do you enjoy doing? What lights you up? And they're like, well, I really love working with service-based business owners because they need a lot of help. They don't understand their numbers. Every conversation provides a bunch of clarity. I'm like, great. Let's just take on more service-based business owners. We don't have to go right to lawyers or creatives or architects or physicians. We don't have to go there yet. Just service-based. And we find the next step that they can get their head around without their sort of internal id brain hitting the panic button. Because I want to keep them out of niche fear because it's paralyzing and it's counterproductive. So we just stop doing the things they hate and we just start doing more of the things that they love. And that makes it a lot easier.
It makes a lot of sense. The process I go through is similar, probably slightly faster. So I would imagine that there is still some fear there. But then the other thing that we do is address where that fear is coming from. Quite often I find that the fear is coming from fear of success rather than the fear of not succeeding. So if I do this, if I get clear, if my marketing is successful, if the business grows, like we said at the beginning, I'm going to have to work more hours and my business is going to be really hard for me to manage. And I'm really nervous about letting clients down. So the fear around niching, not always, but sometimes, comes from the fear of it being successful. And that blows my mind. Like, it's great to see them go through that journey.
So interesting because so often the thing that we fear, we already have. So you said they fear, I'll have to work more hours and I'll let my clients down. Yeah. So often they already have that. They're already working 60 hours and they're already letting their clients down.
Yeah.
And what's hard to see is how it will be better when they're more selective and they get a narrower niche, that in fact they will work fewer hours. So in my mastermind program, they go down to 40 and they go down to 25. And the niche ones are, in the 35, going down to 30, 25, and so on, working fewer hours with happier clients.
Yeah.
But it takes a while to get your head around because, we grew up in this W-2. For us, it's W-2. And, grew up as an employee, just doing whatever work you were told.
Right. So, with the niching, then, I think we've got so many accountants, and it might feel for some that it's becoming a crowded market space. But I think there's so much opportunity still out there, and I think that niching has a big part to play in this opportunity. So, do you feel the same, or have you got a challenge for that?
So over here, there's a lot of talk about how 300,000 accountants have left the profession in the last couple of years. It's like the great CPA diaspora. Everyone just vanished. And there's a shortage of accountants, and there are roles and positions waiting to be filled. And it's a problem because there's accounting work that needs to be done in essential places and nobody to do it.
So is that roles within practices, or like for us, I don't know whether this is true or not. I've got no data to back this up, but it seems like there are so many kitchen table accountants starting up. So they just start up from their kitchen, whereas they probably would be employed by other practices, but they're not available anymore. So do you see that in over the pond?
So over here, what I see is owners looking for staff and finding it difficult to fill the positions. And lots of people going out on their own and hanging their own shingle. So I think there's a mix. And I'm with you, though, and I think I'm just biased this way. Wherever I look, I see opportunities.
Yeah.
I'm just wired to look for them because it's way better to look for opportunities than to not. So I see so much opportunity for accountants to create wonderful businesses for themselves with a really nice revenue, whatever your version of nice is, without working like a dog to create that revenue, while also working with wonderful clients who you love, who behave in the way that you want and are respectful and get you the documents you need on time because you've trained them how to get you the documents you need on time.
They don't come perfect.
Perfect is having Lucky Charms with the Easter Bunny. It does not exist. There's no point in chasing it. So I see so much opportunity for accountants to have wonderful solo businesses, small businesses where they make the money they need. They work the amount of hours they want to and not a single minute more. And they have a meaningful impact on the lives of their, especially business owning, real estate owning clients who really need them for financial clarity and to help manage the financial side or help them create clarity around the financial side of their business and tie it to their personal life and tie it to their retirement and have the whole picture holistically work together.
So when we talk about holistically, we've covered niching and we've covered pricing. The other thing that I know that you're keen on are boundaries. And this is something else that happens over here, like scope creep, is incredible. And it happens, it's not just like accountants, it happens in many small businesses, but the feeling that they just need to deliver, but not charge for it is quite something. So once again, same problem over there. And if so, how do you attack that?
Yeah. So we do a lot of mindset coaching. It's woven into my mastermind. I have a team of mindset coaches who coach on what we think, how we feel, and how we act when we think and feel those things and what the end result is. So your line in there was something like who they feel like they have to deliver. And I would suggest that is only a thought. You do not have to deliver. And scope creep is a vestige of hourly billing. Hourly billing incentivized scope creep because the more the scope crept, the more you did work, the more you billed for it. Yeah. When you flat rate price, you are incentivized to maintain your container and to be crystal clear about outcomes and price in such a way that if the scope creeps a little to the right or a little to the left, it's no big deal because you've priced to anticipate and cover that scope will creep, that random things that are unexpected are going to happen. Like if you dug pools and you were like, oh God, there's a rock here. I can't imagine there was going to be a rock in the ground. Like, come on, you dig pools, you know there's going to be a rock in the ground. Like, you've got to anticipate that things that there is unexpected that's going to pop up, and you need to price to accommodate for it, so that you're not in your mind being like, oh God, scope creep.
Yeah.
So, and that takes courage to price high enough to accommodate for the unknown, but we know it's going to be there, scope creep.
Well, they feel like, and I don't want to speak for them, so that when I say they, this is my imagination speaking, and but based on conversations. But they feel like they're pricing for something that they're not going to deliver. So having that buffer in there, once again, feels a bit disingenuous or a bit out of integrity, I guess. And that's a scary thing. But logically, you're pricing because you know something will happen and it will balance itself out eventually. But as you're doing it, there's a fear around sitting outside of your integrity.
Sure. So the thought is feeling like they're not going to deliver on something they said they would deliver. So so with my folks, we examine all of our thinking, right? Because it's the thing, you can't solve the problem with the thinking that created the problem, right? Einstein. So we need to examine, if we have a problem, we need to examine the thinking that created the problem, so that if we want to solve it, we can think differently in order to solve it. And when this is part of being still caught in the hourly billing mindset, and if you're billing on or pricing on deliverables, we need to shift to pricing on outcomes. What are the results that we're going to get? And the deliverables that fall underneath that, whether, like, if I go to back to the hamburger, if I go and order the silver hamburger and I don't want onion, I'm not asking for 10 cents off my hamburger. It's the silver hamburger, right? So you want to price for whatever is in the silver in the outcome. And if people don't take you up on whatever's in there, that's a they problem, not a you problem. Right? So we're delivering on the promise. Go ahead.
I've had that conversation so many times.
Yeah. It's hard to get your head around. It takes a while, right? And this is part of back to the business owner, the employee to business owner journey, is it takes some time to wrap your head around these new concepts that you have stepped off a checkerboard and you are now on a backgammon board with a different set of rules, and it's a different game. And it takes some time for your brain to catch up to the game that is being played and how it is played. So that's one of those things, is learning to price for outcomes instead of work and deliverables and reports and time.
This is really interesting. So I'm going to wrap up, but I want you to, if it's okay, just highlight some of the changes based on what we've talked about today that accountants can make in their business to achieve the 40 hours, work less, earn more dream.
Yeah. So first, set your sights on 25. You're going to have to go through 40, but set your sights on 25 because you can get there. And we need to disengage clients who are just not a fit for where your business is going. We need to reprice legacy clients who you've been soft on for years. Go to tiered pricing for a monthly recurring most often. Right? I'm a coach, I'm not your coach, so consult your coach for exactly what you should do. But in general, flat rate for productized services, and focus in on who you most want to work with and work that transition over time. It's not a light switch. You're not going to be there next week, but you can transform the very nature of your business in 12 to 18 months, if not even faster. I've seen it done. I help my clients do it all the time. It's absolutely doable.
Fantastic. There is, I hope people take lessons from that, because it's not new information, and I think you'll agree with me. There are many people out there saying it, but you have to hear it at the right time in the right context to be able to absorb this and make real change. So listen to that summary again, figure out what your next step is, and just take an action. And I remember I said an action, like one thing, just change one thing.
It's all you can do is one thing at a time.
Yeah. Like, stop overwhelming yourself. Write it on a list, but just choose the one thing. Do it. I've got one final question for you before we completely wrap this up. What's the sexiest thing about accountants?
My God. Women, numbers, money, and math? What could be hotter?
Done. So thank you so much for coming on and being my guest. You've been absolutely marvellous, talking about all the things that I love to talk about. So I get to speak to lots of people, and I'm very privileged to be able to speak to accountants to get under the bonnet of their businesses. I speak to tech partners, I speak to other mentors and guides in the industry. But when somebody comes on and talks about niching, pricing and boundaries, it makes my heart sing, because I bang on about it all the time. So thank you for coming and delivering the message.
Kindred spirits. Thank you, Kelly. It's been great to be with you.
I will point people to you. I'm guessing that LinkedIn is the right place.
Sure. Yep. And my website, GeraldineCarter.com, and my podcast, Business Strategy for CPAs.
Fantastic. So all of those links will go into this podcast. So thank you for listening. Thank you for joining me, and I will see you next week. And just a final word for me before I let you go. I wanted to say thank you so much for listening to Accountants Are Sexy. When I say your thoughts are the only thing that matters, I truly mean it, because this show is nothing without listeners, right? So please like, subscribe, comment, slide into my DMs. Let me know what you think. Let me know what you want more of, and I will try and deliver. Apart from that, I hope you enjoyed today, and I'll see you next week.